Assalamualaikum warahmatullahi wabarakatuh dan salam sejahtera. Terima kasih kerana menghadiri sidang akhbar pada pagi ini mengenai prestasi ekonomi negara pada suku pertama tahun 2025 dan juga perkembangan monetary dan kewangan oleh Bank Negara Malaysia dan Jabatan Perangkaan Malaysia. Bersama saya ialah Ketua Perangkawan Malaysia Yang Bahagia Datuk Seri Dr. Muhammad Uzair Mahidin. Terima kasih Datuk Seri. Sebagaimana kita sedia maklum, Jabatan Perangkaan Malaysia merupakan agensi rasmi yang mengumpul dan menerbit statistik KDNK negara. As per our usual practice, please allow me to continue the presentation in English for the benefit of our international audience. Global growth continued in the first quarter of 2025, and this is supported by domestic demand as labour market conditions remain positive. Regional trade activity was mixed, with some countries that benefited from front-loading of purchases ahead of the rise in tariffs. Inflation moderated in emerging economies, but it rose slightly in advanced economies due to higher energy and food prices. Before I share in detail our assessment and outlook of the economy, let me now invite Datuk Seri Dr. Uzair to first announce Malaysia's GDP performance in the first quarter of 2025. Silakan Datuk Seri Dr. Uzair.
Terima kasih Governor. Assalamualaikum warahmatullahi wabarakatuh. Salam sejahtera and very good morning. Alhamdulillah pada suku pertama 2025, ekonomi negara kita, ekonomi Malaysia berkembang 4.4%. Peningkatan ini didorong oleh perbelanjaan isi rumah yang berterusan dengan pasaran pekerjaan yang positif dan sokongan langkah-langkah dasar. Perkembangan aktiviti pelaburan yang stabil, pertumbuhan ekspor yang berterusan serta kerancakan aktiviti pelancongan. Dari segi pertumbuhan suku tahun ke suku tahun pelarasan musim, KDNK menunjukkan peningkatan momentum pertumbuhan yang lebih kukuh sebanyak 0.7% berbanding negatif 0.2% pada suku keempat 2024. Dari segi pengeluaran, sektor perkhidmatan meningkat sebanyak 5.0%, sektor pembuatan 4.1%, sektor pembinaan meningkat 14.2%, sektor pertanian meningkat 0.6% dan sektor pelonggongan dan pengkuarian menyusut 2.7%. Sementara itu, dari sudut permintaan, perbelanjaan penggunaan isi rumah menunjukkan peningkatan sebanyak 5.0%, manakala perbelanjaan penggunaan kerajaan bertumbuh 4.3%. Pada suku tahun ini, pelaburan sektor swasta dan awam masing-masing meningkat 9.2% dan 11.6%. Ekspor bersih negara kekal positif bagi dua suku tahun berturut-turut, berkembang 19.6%. In the first quarter of 2025, the Malaysian economy expanded 4.4%. This was supported by sustained household spending amid positive labour market condition and policy measure, steady expansion investment activities, continued export growth supported by E&E exports, as well as vibrancy of tourism activities. On a seasonal adjusted quarter-on-quarter basis, GDP show stronger growth momentum of 0.7%, higher than the negative 0.2% recorded in the fourth quarter of 2024. On the expenditure side, domestic demand was driven mainly by resilient private consumption and private investment. Private consumption continued to be supported by positive labour market condition and policy measure. Meanwhile, investment growth was driven by continuous structures investment as well as machinery and equipment spending. Net export growth was slower due to slower growth in export goods and services. On the supply side, all sectors continue to expand except for the mining sector. Growth in the services sector was supported by higher growth in retail and wholesale segments amid decline in motor vehicle sale. The manufacturing sector registered faster growth in export-oriented subsector, but offset by contraction in motor vehicle production. The construction sector continued to record robust growth, driven by non-residential and special trade subsector. On commodities sectors, the agriculture sector improved amid stronger growth in fishery and other agriculture subsector. However, the mining sector contracted further due to lower oil and natural gas output. In addition to the release, DOSM also published the annual GDP report for 2024, which include the recent updated GDP figures for the year 2022, 2023, and 2024 at 9.0%, 3.5%, and 5.1%, respectively. The revised data are also reflected across quarterly and monthly GDP time series based on the latest data available. The current account of the balance payment recorded a larger surplus of 16.7 billion or 3.4% of GDP in the first quarter of 2025. Key drivers include higher goods account surplus supported by strong E&E export, as well as lower secondary income deficit. FDI recorded an inflow of RM 15.6 billion during the quarter, driven by equity injection, reinvestment of earning, and debt instruments. These FDIs were channeled mainly into services sector, predominantly in financial activities and ICT subsector. The FDI were primarily from Singapore, Hong Kong, and Germany. Meanwhile, direct investment abroad, DIA, registered a lower net outflow of RM 3.5 billion, mainly into the services sector, followed by mining and quarrying. Indonesia, Brunei Darussalam, and Thailand were the main destination of our DIA. Thank you. Let me now hand over presentation back to Governor. Thank you.
Thank you. Terima kasih Datuk Seri Datuk Jose. Let me start with global developments. The global environment has become highly uncertain following the escalating trade tensions and the rapidly evolving trade policies. And in recent reports, multilateral agencies like the IMF, the World Bank, and the World Trade Organizations have downgraded their global growth and trade outlooks accordingly, and based on a range of assumptions, for example, on level of tariffs, goods covered, and also others. Nevertheless, the cyclical drivers will still continue to sustain global growth, and this include the stable labor market conditions, continued E&E demand, monetary policy easing, and also fiscal support in major economies. Additionally, the longer-term structural shifts towards digitalization, automation, and lower carbon transition will continue to provide further support to global growth. In light of the heightened trade tensions and global policy uncertainties, growth for 2025 is expected to be slightly lower than the 4.5 to 5.5 forecast range that we announced recently in March. Multilateral institutions have also revised their growth forecast for Malaysia slightly lower. For example, the IMF has revised their forecast for Malaysia from 4.7% to 4.1%. While we do have an internal view, the global environment at the moment is still very fluid. Trade negotiations are still ongoing, and the outcomes remain uncertain, although we have seen some positive outcome being announced recently. And of course, all this can affect our outlook. As we get more clarity on the outcomes of the ongoing trade negotiations, we will finalize the new forecast and will announce this in about 1 to 2 months' time. It is important to note the positive developments surrounding global trade negotiations in recent weeks, and if this continues, it will bode well for the global and also the Malaysian economy. One thing to note is that Malaysia is facing the external headwinds from a position of strength. We had a good growth of 5.1% last year as domestic demand remained resilient, supported by household spending and investment activity. We expect the resilient domestic demand to continue. And on the external front, the continued demand for E&E goods alongside the higher tourist arrivals, this will also continue to cushion growth from adverse shocks. Malaysian exports are also more diversified in terms of both products and also market. Nevertheless, as a trading nation, Malaysia will not be spared from the impact of the US tariffs. Let me briefly describe the channels by which tariffs will affect the Malaysian economy. First, tariffs will affect our exports directly through lower demand from the US and indirectly via the lower global growth, especially from our major trading partners. Second, the more subdued trade activity will result in lower income for firms and households, especially those in the export-oriented sectors. Given the weaker sentiments, these factors will weigh on domestic consumption and investment, with feedback loop that may further dampen domestic demand. There are, however, some factors that could help to cushion this impact in the near term. Let me elaborate on the factors in the next slides. First, Malaysia clearly benefited from the front-loading of exports as businesses try to avoid higher tariffs. Second, 32% of our exports to the US are actually exempted from tariffs, including the key products such as semiconductors. Third, our exports tend to be price inelastic, which means the quantity demanded for our exports will not drastically change in the short term when prices increase due to tariffs. Examples of these products include electrical machinery, computer hardware, and optical and scientific equipment. Turning to the middle chart, we have already observed some signs of front-loading in E&E exports as firms try to soften the impact of tariffs. And this underscores the strong underlying demand for E&E products. And we expect demand for E&E to continue, supported by Malaysia's entrenched position in the global value chain and the AI-related demand. Tourism will also continue to play a significant role in 2025. The improved flight connectivity, the extension of visa-free policies, and the promotional efforts leading up to the Visit Malaysia Year 2026 are projected to boost both tourist arrivals and also receipts. Of course, we are vigilant to downside risks, particularly from higher trade restrictions and potentially weaker income and demand from international tourism, affecting Malaysia's goods and services exports. To complement our data assessments, the bank also engaged export-oriented firms to collect on-the-ground insights on the tariff impact. In fact, we did this quite recently. And these insights suggest that in the near term, less than one-third of surveyed firms indeed expect to be negatively impacted by the tariff measures. However, most firms foresee limited impact or even positive impact in the next 3 months. This stems from several factors. As mentioned earlier, some of our exports to the US are currently exempted from tariffs, and in some cases, orders have already been secured for the upcoming months and providing a buffer against any immediate disruptions. Firms have also confirmed the presence of front-loading activity by their overseas clients, as observed from the macro data. Inventory building by these clients has led to a surge in demand for Malaysia's exports. While the external environment is uncertain, domestic consumer spending remains as the anchor of growth for the Malaysian economy, supported by positive labour market conditions. Moving forward, household spending is expected to remain resilient, supported by continued employment and wage growth, particularly within the domestic-oriented sectors, as well as income-related policy measures that was introduced by the government recently. Additionally, sound household balance sheet and the larger disbursement of targeted cash transfers will also support the household spending. Apart from consumption, growth will also be supported by continued expansion in investment activity. Overall investment grew by 9.7% in the first quarter of this year, and this is supported by both structures and machinery and equipment. And going forward, the investment momentum is expected to be sustained by the progress of multi-year projects in both private and public sectors, despite the rising global uncertainties. And furthermore, the continued high realization of approved investments, especially among the domestic players, will help cushion the impact from external shocks, making the investment landscape more resilient. Moving on to the balance of risk, the economy remains subject to risks from both external and domestic factors, with the balance of risk tilted to the downside. Downside risks include a deeper slowdown in major trading partners as a result of trade restrictions, a weaker sentiment amid the higher uncertainties affecting spending and investment, as well as lower than expected commodity production. On the other hand, growth could be higher if trade negotiations are successful and pro-growth policies are pursued in major economies, as well as a more robust tourism activity. This is where we will continue to monitor these developments very closely. Now let us turn to inflation. Headline and core inflation trended below long-term averages, averaging 1.5% and 1.9% respectively in the first quarter of this year. The moderation in headline inflation is broadly in line with the overall easing cost environment. Moreover, the moderation also reflected dissipated effects of past domestic policies, which resulted in lower utility inflation as well as lower inflation for mobile services amid the price reductions for selected postpaid plans. Conversely, core inflation edged higher during the quarter due to higher rental inflation. For 2025, headline inflation is expected to remain moderate, below 3%, given the further easing in global cost conditions and the absence of excessive demand conditions. However, a new inflation forecast will likely be announced as well as we review the updated GDP projections in the near future. Sustained moderation in global commodity prices will likely contribute to continued moderate cost conditions. Within this benign cost environment, the overall effect of the announced domestic policy reforms on inflation is expected to be limited. Externally, risks to inflation may stem from uncertainties in global developments surrounding global commodity prices. Financial markets and trade policies among key economies could also shape the path of inflation. Domestically, the outlook remains subject to the overall impact of domestic policy reforms, particularly the subsidy rationalization. Turning on to the monetary policy, the OPR was maintained at 3% at the recent May MPC meeting. We acknowledge that changes in global trade policies and the uncertain global environment will weigh on Malaysia's economic outlook. But the extent of impact, including on our external sector, remains subject to the outcomes of trade negotiations that are taking place globally. As I explained earlier, we are facing these external challenges from a position of strength, and our resilient domestic demand will continue to anchor economic activity, and inflation will also remain manageable. The MPC assesses that the current monetary policy stance is consistent with domestic inflation and growth prospects. We recognize the downside risks to our economic growth, and given the fluidity of the current situation, the MPC remains vigilant to incoming information to inform our assessment of Malaysia's economic outlook, which will guide our monetary policy path going forward. We will ensure that our monetary policy stance remains conducive to sustainable economic growth amid price stability. In the first quarter of 2025, the ringgit broadly remained stable, with a marginal increase of 0.01% on a nominal effective exchange rate basis, or NER, against the currencies of our major trade partners. The ringgit also recorded an overall appreciation of 0.8% against the US dollar. Overall, year to date, as at 14th of May this year, the ringgit has appreciated by 3.6% against the US dollar and 0.7% on the NER basis. This movement was primarily driven by broad-based weakening in the US dollar, as growing uncertainties over US trade policy led to increased investors' expectations for slower US economic growth. The ringgit's value continues to be market determined. Bank Negara Malaysia remains committed to ensure an orderly functioning of the domestic foreign exchange market, supported by ongoing initiatives to encourage flows into the market. Going forward, capital inflows amid the narrower interest rate differentials between Malaysia and the advanced economies are expected to lend support to the ringgit. However, downside risks, particularly from larger negative spillovers driven by the impact of trade tensions on global growth outlook, this could weigh down the ringgit. Despite the continued influence of external factors on the ringgit's trajectory and the continued heightened volatility in the short term, but Malaysia's favorable economic prospects and domestic structural reform initiatives, complemented by the ongoing initiatives to encourage flows, will continue to cushion the ringgit against all these external shocks. Let me move on to credit. The growth in credit to the private non-financial sector increased to 5.5% in the first quarter of this year, amid higher growth in outstanding corporate bonds. Outstanding business loans expanded by 4.8%, supported by an increase in growth of working capital loans. For households, outstanding loans grew by 6% amid the broadly steady growth across most loan purposes. The demand for both business and household financing remained forthcoming, with sustained levels of loan applications for the quarter. Financing by banks and the DFIs remains supportive towards SMEs business activities in the first quarter of this year, with a moderated outstanding financing growth at 7.4%. And in this quarter, we saw an increase in financing demands, particularly for working capital purposes, to further support the SMEs' business operations. Financing approvals and disbursements remain forthcoming for both purposes, which is due to the improved business conditions and a positive economic outlook. The banking system continued to play an important role in supporting economic growth during the quarter. Banks' strong financial position, including capital and liquidity buffers, ensures that they remain well-positioned to support the domestic economy's financing needs. The quality of businesses and household loans remains sound, with low and stable impairment ratios. Newly restructured and rescheduled loans are also limited. This has been supported by prudent loan affordability assessments and provisioning practices by the banks, which help ensure banks have sufficient buffers to absorb any losses. In summary, the Malaysian economy expanded by 4.4% in the first quarter of this year, driven by the steady expansion in domestic demand, alongside continued exports growth. Growth was affected by lower oil and gas production and normalization in motor vehicle sales and production. With escalating trade tensions and associated uncertainties, growth in 2025 is expected to be slightly lower than the 4.5 to 5.5 range that we announced in March. We will announce a new forecast soon. Balance of risk to the growth outlook is currently tilted to the downside. Meanwhile, headline inflation is projected to remain moderate. Overall, while we see risk and uncertainty, we are vigilant and ready to tackle these challenges. We are in a position of strength, and we have the policy instrument and policy space to act if we need to. With that, I have come to the end of the presentation. My team and I, as well as Datuk Sri Dr. Uzi and his team, will be very happy to take on your questions. Thank you very much.
Thank you, Governor. Now we're moving on to the Q&A session. If you have any questions, please feel free to raise your hand, and one of our mic runners will pass the mic to you. When asking your question, please state your name and the organization in which you are affiliated with. We will take the questions in 3 segments. The first segment will be on the economy, the second segment will be on the financial sector, and the last segment will be on other topics. All right, let's take some questions on the economy. The lady on my right, please.
Hello, good afternoon. I'm Green from Business Today. So as stated, the Malaysian economy expanded further by 4.4% with a steady expansion in domestic demand and continued report growth. What would you say would be the major factors that led to this support? What would you say is the most notable factors that resulted in these numbers?
All right, can we take on the second question? We'll take a couple of questions in a go. Yes, gentleman on my right, please.
Governor, thank you very much for your presentation. Seiichi Oshima from GG Press. Could you explain a bit more about the feedback loop from the change in the external trade? How long will it take, and how much effect will it have on the domestic economy?
All right, can we take one more question for this segment, please? Please, the lady in the middle, please.
Yeah, besides OPR and SRR, what other policy instruments that can be used actually to support growth? Thank you.
All right, Governor.
Thank you, Janvi. There are 3 questions here. I'll take the first one in terms of the factors that's driving the first quarter growth this year. It's the same factors that was driving growth last year. Mainly in terms of private consumption. You see private consumption still growing, and what is supporting this? Again, employment is supporting this. You see the unemployment rate has come down to 3.1%. This is even lower than what we saw pre-pandemic, and this provided support for consumption. And we also have a still strong labor market participation, and we have increasing wages. So all these 3 factors supported private consumption. Second is that investment. We see strong investment growth, and we see the implementation of the investment that has been announced in the past, and all this also provided growth to the first quarter. And as you saw that, I think there's legs that's coming in from last year's growth. For example, last year investment was at the highest level, and we attracted 317 billion of investments, both foreign and domestic investments, and they are now at a different stage of implementation, and those were the factors that drive investments and supported growth as well. Third, export. As I mentioned earlier, we have seen export being positive, and also in terms of there's some front loading that's happening in the first quarter as well. And all this supported growth for the first quarter. And all this will also have legs to support growth in the next quarters to come. Another factor is tourism. Tourism is also increasing, both in terms of arrivals and also tourist receipts. So these are the driving factors that is driving the first quarter growth. Second, on the feedback loop with regard to trade, how long and how much will affect the economy. It's uncertain in terms of how long this will take because, as you know, that there's been a lot of announcement that's been made post-Liberation Day. And after that, there's a lot of announcement in terms of retaliation. And now there's announcement in terms of negotiations. So they are all ongoing now. So it depends on how fast this can be concluded and how fast this can stabilize. Then that will return to be better. That's in terms of the timeline. Again, it's difficult to predict at this point of time because things are very uncertain and very unpredictable. And in terms of how much impact it will have, in terms of Malaysia being a small and open economy, of course, will be affected in terms of impact coming from this trade. But again, I think we have a diversified economy. And we look at the export sector, we have a very well diversified export market and products. None of any single country or our export partner, accounts for more than 15% of our exports. So it's very well diversified. And so this is where it will mitigate in terms of the impact on Malaysia. And also we have a very resilient E&E sector and also continued support from the tourism. And our E&E, if you look in terms of the demand for the E&E, is also forthcoming. Why? Because investment in terms of digitalization will continue despite the tariffs. So that's where there's continued demand for our E&E. And I think these are factors that will support us. And as mentioned earlier on, the household spending, that's also another important engine of growth for the country. And Malaysia, as you know, growth is mainly driven by domestic demand. Right? So I think that's where it will continue to provide support for the Malaysian economy. And we expect the impact will be contained and limited. And so that's why I think we are monitoring this very closely in terms of developments with regard to the announcement from the negotiations that's taking place, and also in terms of where this will land to in regard to tariffs. Amanda, your question on the, apart from OPR, FS, the SRR, of course, I think there are many tools that can be undertaken in terms of, like I think monetary policy, you know, is a blunt tool and is more of a domestic demand management tool. Right at the moment, you see that government has even preemptively come up with some targeted measures in terms of some assistance to targeted group. We know that while we may be impacted, but of course the impact may be felt by certain sectors. For example, those related to the export sector maybe. So that's why the kind of targeted assistance, targeted support is important. So we need to see more of a complemented and coordinated measures. For example, from fiscal perspective, from monetary policy perspective, and also there are other tools. Like for example, even Bank Negara, we have our funds that we also provide to the SMEs to help them in terms of pivot and to help them in terms of managing in terms of demand, if the demand increases, for example, from the increase in exports that I think we face. There are many other tools that we have, including, for example, the financial market tools, or liquidity operations tools, and the rest. So these are the kind of tools that, in this current environment, we do have space, and we do have the necessary tools if we need to react.
Okay.
Thank you.
Thank you, Governor. Let's go for the second round of econ questions, please. The lady on my left.
Hi, Duratul from Bernama. You mentioned earlier that the 2025 GDP revision will be announced soon. May I ask how soon that might be? Will it be after the 90-day pause? And the second question would be, to what extent has Malaysia's recent trade performance been influenced by the front-loaded demand, and do you expect a payback effect in the coming quarters?
All right, can we also have the lady on my left, please? Thank you.
Hi, Governor. Anis from NST. Can we expect Can we expect OPR cut in near term to support domestic demand?
Okay. Sorry, can we have the gentleman on my right, please? Can you please raise your hand a little bit higher? Thank you.
Hello, I'm Daniel from Reuters. Over here on the other side. Here. Yeah, I'd like to get confirmation that final quarter GDP figures for 2024 was revised down to 4.9%. And then my second question is, the government has delayed an expansion of the sales and services tax from its initial May implementation. Does B&M foresee any other policy or reform delays, such as the much anticipated RON 95 fuel subsidy rationalization? Thank you.
Okay, I think that'll be all for now. Governor?
All right, thank you. I think in terms of when revision will come, I mentioned it will come within 1 to 2 months. Why? Is because we want to get clarity on some of the incoming data by then. And second is that to be able to get some clarity in terms of the some outcome from the current negotiations that's taking place. So that's why I think we're taking a bit more of time, because we do not want, because we just came up with our growth forecast in end March. And at that point of time, we did put in somewhat rather conservative assumptions. But of course, I think post-Liberation Day, the announcement goes beyond the expectation of everyone else. So definitely there's an impact there. And we acknowledge that we need to do a revision. But we do not want to do a revision based merely on assumptions. We want to have some solid grounds for us to make assumptions, and therefore we come up with a more credible forecast for the year. This is important because I think we don't want to just come up with a revision and the next day knowing that we need to revise it again. And this may not be healthy or I think positive for businesses, because that will add further uncertainty to the already heightened uncertain environment at the moment. So please be patient on that. We'll come back on the revised GDP growth. And second, in terms of whether the recent front loading, yes, we did notice. In fact, from our engagement with the exporters, with our MNCs, they did indicate there are some front loading happening. But of course, I think there could be some normalization happening since there's some front loading. But of course, I think we do see continued demand for export product. As I mentioned earlier on, our export are mainly in semiconductors, in E&E, and E&E is where it's supporting the digitalization, AI-related, and the rest. And the demand for AI-related will continue to be there. Therefore, there will be continued support for our export demand. Well, can we expect an OPR cut? Okay, going back to monetary policy. You know, in terms of monetary policy, our objective is really to ensure that we have a sustainable growth amid price stability. And with OPR at 3%, what we decided at May recently, the MP stance is consistent with our current assessment on domestic inflation and also growth. So that's what it is. And I think given the highly fluid external environment, we will continue. So that's why the data is very important. The data is coming is very important. We'll continue to monitor the developments to get a clearer picture. And this will be the guiding principle, the guides for us. And when we meet at the next MPC, and we have 6 MPC in a year. And at every MPC, we'll get fresh data coming in, and that will help us in terms of assessing the outlook for inflation and growth for the next couple of quarters. So that will guide us in terms of making decisions whether to move or not to move in terms of our monetary policy position. But more importantly is that we will continue to achieve our monetary policy objective, that is to ensure sustainable growth amid price stability. Okay, that's on the monetary policy. In terms of the revision for GDP for 2024, I will invite Dr. Uze to answer on that. And before that, maybe I'll just answer on the reform. As far as we're concerned, government is very committed in terms of undertaking these reform measures. And the current environment, given that we are experiencing steady growth, we are experiencing contained inflation, that provides us a very good window opportunity for us to undertake reform. And more importantly to note is that the resilience of the economy that we have right now that enables us to cope or to ride through all these challenges comes from the reform measures that we have undertaken in the past. Therefore, it's important for us to even double down on reform measures to further strengthen the resilience of the economy. Over to you, Dr. Jose.
Thank you, Governor. On the revision, actually we revise the number based on the latest data available to us. For 2022, the published number originally is 8.9. Now the revision number is 9.0. That was for 2022. For 2023, original number published 3.6. We revised to 3.5. And for 2024, it's no changes in the overall GDP, 5.1 and now also 5.1. But the component subsectors, we revised on services from 5.4 to 5.3. So I would also take the opportunity to also inform on the revision on the current account. 2023 original surplus 28.2 is revised to 20.0, while for 2024 from 32.8 revised to 27.7, and the current account balance percentage to GNI 2023 from 1.6 to 1.1, and for 2024 from 1.8 to 1.5. Thank you.
Right.
Dr. Jose.
Thank you, Governor. Thank you, Dr. Sri Uzi. Can we have the last round of econ questions, please? Sorry, the gentleman on my right.
Yes, hi, I'm Shakir Wahab from the Malaysia Reserve. This question is related to the Maybank CFO's issue, where Maybank recently removed his CFO. We now understand that it's related to an attempted online scam. So how does Bank Negara view this issue? Has the central bank initiated an inquiry into this breach? Yeah,
okay. Thank you so much for that question, but Bank Negara Malaysia does not comment on individuals or individual financial institutions. Just for the record. Can we get another question, please? Thank you.
Yes, good afternoon, Governor. Eileen from the Star. Just want to double confirm. So the front-loading activity, has it still elevated or has it shown signs of easing? And will we not see that kind of support from the second quarter onwards, or is there still support carry on for the second, third, and fourth quarters? And as of now, tariff exemptions are on Malaysia's key export products like semiconductors, but as we know, US is also looking down on sector-specific tariffs on semiconductors. So when they come up with that tariff rate, will it drastically change or impact our growth and support factors from that point of view? Yeah.
Okay. Any more questions on the economy? One more, please. Thank you.
Well, looking at the last statement from the Monetary Policy Committee meeting, you changed the first sentence of the last paragraph. First time in 1 year and a half. The last paragraph, the first sentence of the last paragraph has been, well, at the current OPR level, the monetary policy stance remains supportive of the economy and is consistent with the current assessment of the inflation and growth prospects. Well, this sentence came in September 2023. Now it's changed. It's, well, only consistent with the growth and inflation, well, forecast. Does it mean that the current OPR is at the neutral level to the economy?
All right. Thank you. I think that will be all for this round. Governor, over to you.
Thank you. I think on the front loading, as I mentioned earlier on, we have actually seen some front loading activities. It's not that excessive, but it's based on our engagement with our companies operating in this area. And so that's what they've indicated. They have seen some front loading. But again, of course, I think once there's front loading, there could be some normalization. But as I said, the export demand from Malaysia, as we are more in the E&E sector, as semiconductors, where the demand for A&I products, AI products, the demand for digitalization will continue despite tariff. These are things that's going on in terms of automation, digitalization, and the rest. And this would provide continued support for our export. But having said that, of course, I think for this year we can expect some moderation in our export, given the uncertainty in tariffs and the rest. And while all the negotiations takes place, I think while we land on the stable situation, there could be some impact on our export. But again, as I mentioned just now, while this could have some impact, but we are coming from a position of strength. So that's where, in terms of impact on our growth, will be rather limited. So that's in terms of the front loading. And to the question on any US Pacific sector, as I mentioned earlier on, about 30% of our semiconductor are exempted from tariffs. Again, I think there could be certain other announcement that may come post the negotiations. We do not know. So that's why we need to remain vigilant, and we'll take it as it comes. And as what we have said is that we know that I think in terms of our export is diversified. As I said, that there's no country or trading partner that has more than 15% of, in terms, that account for more than 15% of our export. So therefore, the diversification of the export itself will be able to manage or mitigate the potential impact from any implications from the tariffs itself. Interesting question that you asked in terms of the drop of the word supportive. So basically, things has changed. Things are even evolving right now. As far as we are concerned, our multi-policy objective is to ensure that we have a sustainable growth with price stability. So that has not changed. But in terms of the changing economic landscape, the changing in terms of economic data, so that could also have an impact in terms of level of competitiveness. Level of competitiveness is changing. So that's where we need to monitor this very closely. But more importantly is that at the current 3% OPR that we decided at the recent MPC, this is consistent with the outlook for inflation and growth that we are seeing in the near future. So that's where I think, more importantly, I think that is the point that we need to understand. Thank you.
Right, thank you, Governor. I'm mindful of time. Can we go for one round of financial sector related questions? The lady on my left, please.
Hi, Governor. Esther from The Edge here. Just this is regarding the recent SRR cut. I would like to know, is it right or accurate to interpret the SRR cut of 100 basis points as a preemptive measure to prevent liquidity crunch? And secondly, could you please maybe elaborate a little bit, what are the signs that maybe Bank Negara saw that point to the need for such a big cut?
Okay. Any other questions for this round? Gentleman on my right, please.
Hi, Daniel again from Reuters. I have some questions on the strengthening of Asian currencies against the dollar, including the ringgit. So how does BNM plan to deal with an increase of money coming back into Malaysia? Are there any plans to intervene, possibly through interest rate cuts? And any other risks or complications that BNM is preparing for? And also in terms of bond auctions and yields, is there too much demand for your debt now? Thank you.
All right. I think, Governor, we can go with this. Over to you, please.
Okay, I think let me just first answer the question on SRR. I also get my colleague, Mr. Nisham, to come in on the SRR itself. And second, on the flows, I will also answer, and we'll get my colleague, Adnan, to also come in on that. On the SRR, certainly it should be decoupled from monetary policy. It's not a prelude to OPR cut. It should not be seen as that. Because SRR is a liquidity tool. And the reason for the cut in SRR is a more preemptive move to provide greater liquidity to the financial sector to the banking system so that they can play an effective role in their intermediation. So that's the main purpose of the cut in SRR, to inject more liquidity into the market so that this can be on land, and that will enable the banking system to play the intermediation role to provide financing for the economy to support the domestic economic growth. So that is the main reason for the cut in SRR. Let me just answer on the bonds, and then I will invite DJ Sham and DJ Anna to also come in. In terms of the flows that we're seeing coming in, I think we actually, this year, we observe quite a robust primary market demand for the Malaysian government bonds. And we could see this from the strong bid to cover ratio that I've seen. For example, is about 2.8 times. And this is higher than the 5-year average of about 2.2 times that we have seen in the past. And this increased demand is largely attributed to domestic investors, including the pension funds, and driven by the favorable economic prospects, the fiscal consolidation, and also the ongoing structural reforms that we are seeing. But of course, I think the financial system will be able to absorb this, and also to intermediate this for economic needs of the country itself. So that's what I can say in terms of the flows. And of course, I think we are not intervening in terms of to stop this, and we do see this as a positive signs that I think there's got confidence in the economy and there's prospect for the growth in the economy itself. Maybe I'll let the Jisham to add on the SRR, and the Jannat to also add on the flows. Good, Sham.
Thank you, Governor. As Governor mentioned, the SRR is a liquidity management tool, and since last year we have observed some decline in the liquidity in the banking system. As such, the reduction in the SRR by 1 percentage point will inject about 19 billion permanent liquidity into the banking system, and we see this as a way to also improve the liquidity management by the banking system, as well as does facilitate greater intermediation by the banking institutions. Thanks.
Thank you. So on the inflows into the market, so we are seeing, as Governor mentioned, inflows that have also led to strengthening of the ringgit. And this has actually happened across the region, not just Malaysia. It's not unique to Malaysia. But nonetheless, it has also led to quite low yields. And whether Governor mentioned that there is certainly strong demand for bonds, and we do see that in even our auction results, and the trading volume is also quite high. So if we compare trading volumes that we see in the MGS market and the MGII, the Malaysian Government Investment Issues, which is Sukuks, the Malaysian government Sukuks, it has doubled compared to where we have seen in the past. So the markets are highly liquid. There's a strong trading volume, and I think among the things that we are also looking forward is actually to also see further acceptance of MGII in particular. And we have been on this, I can share that we have been working with the industry as well as FTSE Russell for the inclusion of MGII into the World Government Bond Index in the future. I think this would be, a strong acknowledgement of the maturity of our Sukuk market. And we have seen also that even before this, it has already been included in key indices such as Bloomberg and JP Morgan. So the strength of the bond market and the Sukuk market is certainly there. While it looks like there's a strong demand, it certainly is strong demand. What it looks like, the question that you asked, whether there's too much demand, certainly we can actually expect a very deep and vibrant market, given what's happening, together with the government's efforts to improve its fiscal position, which bodes well for the fundamentals going forward. Thanks.
One more thing I would like to add, there have been some questions on front loading. I think one point that important to note as well, the front loading of export is not unique to Malaysia. It's also been happening. We have observed this in regional countries as well.
Thank you, Sham. Thank you, DG Sham and DG Adnan. And just to add one more point in terms of the flows, I think Malaysia also have a very deep market with diverse players, and therefore that's why they will be able to absorb and intermediate these funds that's coming in. And again, as what DG Adnan mentioned, for the exchange rate, our presence in the market basically more to ensure there's no orderly market and there's no excessive volatility. And of course, ringgit is continue to be market determined.
Thank you, Governor and DGs. Okay, let's go for the last round, which is on other questions. Any questions on this segment? The lady on the left, please.
Hello, Anis from The Edge. Governor, you mentioned about this year the economy going to be affected by the changes in global trade policies. Do you see that this is going to last in the next 2 years? Like, do you have any idea on how it's going to last for the next 2 years?
Any other questions? Sorry, the lady in front of me at the middle. Can you raise your hand up, please, ma'am? Thank you.
Hi, Hayatun from the Sun. For context, the 31% and 69%, what kind of firms do you engage? Is it from how many, and is it from manufacturing or E&E? For context.
Okay, maybe the last question for this segment, for this session. Okay. If there are no more, and Governor, the last two questions.
Thank you for the two questions. I think in terms of how long this will have an impact, it's very difficult to predict because it depends on how quickly this can be resolved in terms of the negotiations, and how quickly I think this goes back to, I wouldn't say normalcy, how quickly this goes back to a stable environment. So once we go back to a stable environment in terms of there's clarity with regard to the level of tariffs for all the countries globally, then so that's where the stability will come in. But of course, in terms of the near-term impact, certainly there will be some impact on our growth because of a small and open economy. But again, as I've said, we are coming in from a position of strength, and therefore this will provide us with a cushion to continue to grow. That's in terms of the first question. I think the second question, in terms of the firms too, it is based on 36 companies, and they are all export-oriented companies. And this is a special additional survey that we did post the Liberation Day announcement. As you know, we have our strong surveillance team on the ground at all the 6 regional offices that we have, and they do meet these companies regularly. And in fact, they visited these companies to get the latest indications from them. So that's where we found some could have been affected, and most of them feel that they may not be affected, and even may be positively impacted from this.
All right, thank you so much for your questions. We have come to the end of... Oh, sorry.
If I could add, the engagements actually took place between 20th April to 13 May recently. So very, very recent after the Liberation Day announcement. Thank you.
Thank you, Governor and DGs. We'll come to the end of our Q&A session. Governor, can I invite you for your closing remarks, please?
Thank you, Janway, and thank you everyone for all your questions, for being present here today. Before I conclude the session today, I would like to invite you, every one of you, to Sasana Symposium that will be held on the 17th and 18th of June. The Sasana Symposium offers an additional avenue for the public, including you, the media, to learn about some of the research we published in March. Participants will include industry leaders and experts who will engage on contemporary issues related to monetary policy, ringgit, digitalization, medical health insurance and takaful, social safety nets, Islamic finance and sustainability, and much, much more. With that, thank you, and we look forward to seeing you at the upcoming Sasana Symposium. Thank you so much, everyone.
Thank you. That brings us to the end of our press conference. Thank you.